Hey there, it's Trisha with Easy Emini Trade, and I wanted to go over a couple things with you from Friday that you might find helpful when trading the Kaboom setup. Also, I'd like to mention that my next upcoming webinar will be Thursday, March 24th at 8 p.m. Eastern. Okay, so let's go ahead and look at Friday. By now, we've been trading this for quite a while. It's just about a year now. I think it's just about 10 months. And I'll point it out on the NQ, and you can adapt what I'm showing you here for whatever you're trading, no matter what tick, time, or range frame that you're using, and whatever instrument that you're trading. It'll all work. On the NQ, typically I like a 1.5 range chart, but I have been using a 1 point range chart, and it's been working out really well. When we first started to trade the Kaboom, the 1 point range chart was way too fast. It just moved very quickly, so it was difficult to get in. And if you find that you give the 1 point range, which by the way translates into a 4 tick range chart, but if you try the 1 point range and it's too fast for you, then just go back to the 1.5, or you may even try a 1.25. But anyway, so the couple things that I want to show you are, first off, if you are going to use a 1 point range chart for your entries on the NQ, I would suggest a 1597 tick chart as your broader view, not the 3000. And what I'm going to show you is for taking conservative entries. And what I've got here is I have my moving average here colored based on the slope. If it's sloping lower, it's going to color this pinkish color. If it's sloping higher, it's going to color this greenish color. I'm sure that we've already gone over that in the past. And then on the broader view, the 9 weighted colored the same. Green for higher, pinkish for lower. And what you'll find is if you wanted to be conservative and you get your setup happening, like here, we get our indicator crossing above 0, that signals that we would want to take a buy if price was trading above our moving average here, and you're taking it with the overall trend. However, if you want to wait for the slope on this, on our 22 here to match before taking that entry, it will give you higher odds of the trade working out to getting to at least your first target. I'm not going to say that it's not very conservative, because it is, and I'm not going to say that you're not going to miss trades that are going to work out. There are going to be plenty of trades that you're going to miss that are going to work out, but it is a way of being very conservative. So, for example, here, this would have been a pass on Friday morning, and even if you were willing to take it, this happened within seconds of the market opening, so the likelihood of you being able to take that would have been pretty slim in my opinion. So then you would be looking for a pullback to our moving average here. This doesn't quite make it here. I like to see it pull back to the 22 when trading off the 1 point range, but on the 1.5, I don't mind it just pulling back to our smaller moving averages. So that could be something that you can decide for yourself. What I would suggest is to just make sure that our smaller moving averages, the 6 EMA and the 9 here, are heading higher. And I would suggest, if you are using the 6 EMA, that it's leading the way. It's on the top side there of the 9. So that would be questionable whether you would take that pullback or not. So then we're waiting for either another pullback or a brand new entry. 939, we get a brand new entry here. Indicator crossing above 0. And if you look over here, we are above our 9 weighted here on our broader view. What I'd like to point out is when you see this, let me just make this a little bigger here. Whoops, wrong chart. When you see that price has moved pretty far away from our moving average here, it's likely that price is going to find its way back there and give us a bigger pullback. We don't obviously know when that's going to happen, but it's usually not far from happening when you do see that. And I'd like to point out we get this setup at 939, and in taking that as a buy, this is where you're taking it right here. So the reason I'm pointing this out is the likelihood of this moving a lot is likely going to be slim. You still get your 2 points out of it, so it works out just fine. Everything's there. If you look at the slope on our moving average here, it's green, it's sloping higher. If you look at it here, it's green, it's sloping higher. We have our indicator crossing above 0, so we're good to go, we're good to take it. If you use your 6 EMA to confirm, you get your 6 EMA actually crossing above our moving average here on the next bar. Regardless of which bar you got in, you got your 2 out of it. Here we get a short setting up, and that is at 9:45. But when looking at this, we're not below our 9 weighted over here, we're still above it, so that would be a pass for me. If you are willing to take it, the likelihood is that you would at least find your way back to this moving average area. So for example, if you take this short here, you'd likely find your way back down to this area here, just above the close of the previous day, which is this yellow line. So you may decide that you're willing to take that as a riskier trade in anticipation of finding your way back down here. If you're looking at the slope of the 22 here, it's still green, you can see it. If you're looking here, you're well above that 9 weighted. So unless you're willing to be aggressive in anticipating price finding its way there, you're going to let that one go. At 9:54, you actually get a pullback entry here. Price finds its way back to the 22, and you can see our slopes here on our 6 EMA and our 9, and our slope here on our 22, all heading lower, and we're below our 9 weighted over here on the broader view, and we have a slope on that. So you're good to take that. And that's if you trade pullbacks. Some people choose not to trade pullbacks at all. So here you get a buy setting up, and this is at 9:56, and in this case we're not above the 9 weighted here. So that would be a pass. It would be a pass for me. It might not be a pass for you. If you don't mind being on the incorrect side of the 9 weighted over here, like I said, you may be willing to take a trade anticipating that price is going to find its way back up to the moving average. But this really doesn't leave you much room on this trade to want to take that because the moving average is literally, right here. So again, totally up to you. If you look at the slope here on our 22, it's green. If you look here, it's this pinkish color for down. So that would be a very aggressive entry. I like to be on the top side of the 9 weighted when I'm looking at the broader view over here. On the top side for buys, underside for shorts. It just is helpful in keeping you on the correct side of the trade. But there are people who ignore everything that's going on the broader view. It's totally up to you. What I'm showing you now with the slopes of the 2 moving averages on the different charts is a very conservative way to trade. So here you get short setting up right here, and you're literally right down at the support area, the 50% fib retracement area. So that doesn't look interesting at all to want to take, in my opinion. Here you get a buy, and still the same situation as back here. You get a buy setting up, you're still under the 9 weighted, it's sloping lower, and this is sloping higher. So conflicting information. So nothing to really do there. Here you get a short setting up, and this is at 10 o'clock. And there was news at 9:55, so I just want to point that out. And 10 o'clock also on Friday, so you may opt to just sit back and let the news come out before you're willing to trade, or take a trade close to that vicinity, that time frame. But anyway, you get a short setting up here. You can see the indicator crossing below 0, and in looking at this, at the time you're getting that, you're actually green here on our 22 right here. And again, if you don't want to use that as a filter, you don't have to. You definitely will get more trades not using it, which of course then translates into more trades equals the chance of more losers. But as long as it works out fine at the end of the week or the end of the month, profitability wise, then it really doesn't matter. Here you get a pullback entry right here. It finds its way back to the 22, and this is at 10:03. And when you take a pullback, as we've talked about in the past, you want to make sure that everything is heading in the right direction. Your indicator's heading lower for a short. If you're using the stochastic, make sure that's heading lower. Make sure all your moving averages are heading lower. And the likelihood is that we're going to use this area as our target area where it's held at the 50% retracement. And if it can get through there, then we're looking at this orange line right here, which would be the low of the previous day. And I'm pointing these out just so you can see how you can filter out the noise by looking at the slope. Here you get a buy setting up, and you can see the slope is pink for lower, so not willing to take that. Here you get a buy setting up right here at 10:14, and you're below the 9-period weighted right here, so that's a pass. The only way that you would be willing to take this is if you were an aggressive trader and you were willing to buy it off of the anticipated bounce off support. That's the only reason that you would take that. And that is not this particular setup. That's something that you can do once you've been trading a while or feeling more aggressive. But here you get your second attempt lower here at this low of the previous day, and it fails. Here it tried and it failed. Here it tried and it failed. Here it tried and it failed. So you would expect that it's probably going to bounce probably up to this area. Like I said, it's not a setup per se because we're below the 9 weighted and nothing to do there. It would have to be a pullback entry at that point. And what I'd like to say is don't lose sight of the fact of what is actually going on. If you're going to trade off the 1-point range chart, sometimes it looks like there's a whole lot more going on than there actually is. So don't lose sight of the fact of what actually is going on. And what I mean by that is, here's our 1.5 range chart over here. If you look over here on the 1-point range, it looks like you have a lot more distance between support and resistance than you really do. So for example, you get this, our indicator crossing above 0 here, and you're above your 9 weighted, but you're going to be right back up to this resistance area. So that would be a pass. The same with anything setting up short. If you have all your criteria and want to take it, that actually wouldn't happen. It would happen, let's see, it wouldn't happen here either because you've got a green slope here on your 9 weighted. So all these would be passes if you're going to use the slope on your entry chart to match the slope on your broader view. And the only time that you'd be looking for setups when you're going sideways like this is if you have room up to resistance or down to support. Otherwise, just pass. Just sit on your hands. And as I've started to say, is if you have a hard time seeing that there's not really a lot going on here, then look over here and you can see it probably a little clearer. You can look over on like your 1.5 range chart and see that it's not doing anything. It's just going sideways, and you can see that it's really not a high probability area unless you plan on doing range trades, which of course then you need to have a range that's large enough to trade. But very important to not lose sight of the fact when you are going sideways and you realistically should be sitting on your hands. That's the hardest time for anybody to trade. And if you look over here on the broader view, you can see here you have overlapping bars just going back and forth, back and forth. So unless you have a lot of distance, then you're going to likely want to pass on those. So you're going sideways for quite a while, and you've got resistance up here and support down here. Realistically, you probably wouldn't be looking for anything until you got above this area here of the close of the previous day or below the 50% retracement area if you got a setup that was actually happening. The issue with getting it below the 50% area here is that the low from the previous day is here and it's held. So there's not really anything to do until it can either break out above this area, or with a setup with room up to that area, or a short with room down to this area. So none of these would really be the case, because this would be the area where you'd be thinking it's going to hold the 50% right here. And here you get a break below that, but there's no setup right there. So it would be a pass. Here you do get a buy setting up, but if you're, again, looking at your slope on the broader view, you can see it's pink here, and here it's starting to turn green. And you know, you've got this area of resistance here when you look to your left that's held here quite a few times. So that would be your target area. I think it works out for the 2 points, but it's definitely not a high probability entry. Here, now here's what I'm going to point out with the slope here. You have your slope here on 1053. You can see it's turning green here, and you wind up getting above this general area of resistance, but there's no setup. It's like 1, 2, 3, 4 bars late from where you get your indicator crossing above zero. So unfortunately, it's going to have to be a pass. You do get this pullback here to the 22, but you have to ask yourself, a pullback from where and going where? So you get the pullback to the 22 here, and where's it going to go? Back up to the close. So no real place to want to take that. If you're aggressive and you don't require the slope to match on the 22 and the 9 weighted, then you take this. Or you could take it anticipating that it's going to bounce here again. The same here. It would not be the kaboom setup. However, you can be aggressive if you've been trading a while and you're back down to an area of support here, which has held. It held here, it held here, it held here, it held here. So when it fails to break down, you may decide to buy that. And again, it's not something that you have to do. It's, you know, just a thought. So I hope that helps you guys. And if you have any questions, by all means, you can certainly send me an email, and we'll talk to you again soon.